This week on the podcast, you better watch out because HMRC are coming for you. But don't worry, we've got your back. Welcome to the Profit Cash Growth Podcast. This is the podcast for 6 and 7 figure business owners who are looking to grow a financially successful business. My co-host, Claire Hancott, is a finance director, chartered accountant and entrepreneur. And every week, I'll be exploring guidance and frameworks designed to help you increase your profits, improve your cash flow and grow your business. So what is it about builders, Claire, wanting to build their own houses? What is this all about?
I think they see this idea of like making a load of money and they don't factor in their time. We have this conversation every time.
Every time we see a builder who's self-employed decide to go on this spree of building their own long-term home, and then we watch them take, minimum 10 years, sometimes longer to complete it.
We've got a friend on our road and he's a builder and he bought a 3-bed house and he's turning it into a big 5-bed mansion. And you know what? He's doing a lot to it. And he's probably going to make, I reckon, after he's paid for the original property with materials, he's probably going to clear maybe 400-500 grand if he's lucky. But over like 5 to 7 years of working essentially a second job. A full-time second job outside of his other job. Plus, bear in mind that 50% of the increases he will have got on it will have come anyway, even if he just held the original house just through inflation. And do you know, the irony is he said, but to be honest with you, he's over 5 years into it and he looks like he's got another 5 years. Another 5 years left,
and he's like, to be honest with you, I'm getting to the point where the kids are starting to move out now. So by the time this is complete, there's only going to be me and Kate here. And it's just like, we're going to be rattling around this 6-bed mansion and we're going to want to downsize.
And this comes about because our drive to the office in the morning, we stop at traffic lights next to a big bungalow. And it's for, I think, as long as we've lived here.
As long as, this one's over 10 years.
Yeah, and it's a similar story.
It's a local builder.
Builders bought it, wants to turn it into their own house, is doing it in their own time. And it's they would be better off just getting a second job.
Yeah, imagine what their earnings would have been over that 10 years if they'd put the extra 40 hours that they'd put into that at their current skill and labour costs. And I said to you, didn't I, on the way here, that you could apply this, I reckon, to
everything.
Lots and lots of trades where it's almost never a good idea to go on a venture using your own skill set to friends, family and whatever else at an under market value when your value is worth a lot more, and it's just a waste.
Yeah, absolutely.
It's just crazy. Anyway, moving on to this week's news story of the week. This week, Claire, I've picked up, lo and behold, the headline that Britons have been pessimistic about the economy for over a decade now. Yeah. So this is the analysis of the GfK Consumer Confidence Index, which is a very renowned index, which kind of just constantly tracks the feeling of people about the economy. So it's not the reality, but it's how they feel. It's sentiment, as they call it. Sentiment drives everything. And the last time it was in positive territory, so basically, it pretty much lives in negative territory most of the time, but the last time it got above 0 was 2016. So we're now 10 years of negative territory, and for a lot of the last 4 or 5 years, that negative territory has been as low as it was in the 2008 great financial crisis and all the rest of that. It's now risen a little bit. It's at about minus 16 at the moment is where we're sitting. And I guess we have this conversation all the time about, is there a delay between reality and sentiment in the fact that things are getting a bit better, or is that not the case? What do you think?
I think that as a country, as a nation in the UK, I think we're people that generally we've adopted this blame culture. So whenever something isn't as good as we want it to be or isn't where we think it should be, we just blame other people, and that creates this doom loop because people feel out of control. They feel like they can't do anything about it. They feel like it's our crappy government, or it's the taxes, or it's the economy.
Or just quote unquote the rich.
Yeah,
it's
or the rich. There's always somebody else to blame, which makes people feel victimised. And if you feel like you're a victim, then that's a very negative mindset to end up in. And I think it's self-perpetuating. So I'm not surprised that this is the case, because we have been out, 3 times for dinner in the last 7 days, haven't we? And, we've been to not like top end places, but we went to like Miller and Carter, Brasserie Blanc. You spend £100 for a dinner for 2 in there. And every time we've had to wait for a table. Yeah, we've booked and we've arrived, and it's been so busy that our booking's delayed because there's just, these places are absolutely rammed.
And the prices are definitely coming through on the menus in these places because, like I say, an upper end, mid range restaurant like Miller and Carter, which is a chain, you're paying 35, 40 quid for a steak meal now. And that's, it's pretty representative of where inflation's gone, really. So
it shows that there is plenty of money out there. There is plenty of opportunities out there. And okay, there are definitely some industries that are finding it particularly difficult. And we're going through, a big change at the moment. Hospitality for sure is really struggling. But there are plenty of other businesses that are thriving at the moment. And I think it just goes to show that the reality of what's happening, we see in the news these scaremongering stories, but the stories really relate to the bottom sort of 10, 20% of society and not the general masses.
Which are always there in all times, aren't they? There's always a bottom 10, 20, and there's always a top 10, 20, because, you can't...
It's like people are watching it on the news and they think, oh, I'm struggling as well. And they're not actually thinking themselves, am I struggling? Do I have a good life?
They're being brainwashed into it.
The news is telling them and social media is telling them that times are hard and they start to believe it. And I think that that's what's happening with this. It's self-perpetuating. Yeah,
I think things have caught up considerably in reality. I mean, obviously, I work a lot in the property world and, we're very exposed to property. And I just think there's this disconnect between the affordability of property and the narrative that goes on as well. And I was really surprised by this when our mortgage broker, who works with us quite a lot, said to me last week that 2 first-time buyers on a minimum wage salary now can get a £300,000 mortgage easily. And it just made you think, that's quite a lot. I mean, that's not the value of the house. Bear in mind, the average value of a house in the UK is 290. That's the mortgage. So by the time you put a deposit, even if it's 10%, you could afford above average value house as 2 people on minimum wage in this country now.
Yeah. And for context, we live in Leighton Buzzard. We are 29 minutes on the train to London. So, it's quite a popular commuter town. We're in the southeast of England. And what does 300 grand get you here? It gets you like a nice 2-bed house.
A large 2-bed.
In the good end of town.
Yeah.
Or it gets you a 3-bed house in the okay bit of town, doesn't it?
You'd struggle to get a 3-bed for 300
But you can
grand.
get
325, you'd get a reasonable size. You get a 3-bed in a mid-range
that's
area. 300
plus your deposit, isn't
it?
Exactly. Your mortgage plus your deposit.
You could afford a 3-bed semi.
House.
You could have a 3-bed semi. So 2 minimum wage people could enter the property ladder at a 3-bed semi level. This is what I just don't get about this disconnect, because I don't think that was the case when I first bought my place in 2007, where what I could afford was a 2-bed flat, and it's all I could afford. My deposit, I guess I was on my own, but I was probably a higher earner than minimum wage. So the two things correlate. So I think we're in a world where I don't think it's certainly more affordable than it was when people were buying in 2007. A lot more affordable housing is at the moment, because mortgage rates are better. They were 7% back then, and the housing market's not gone up a huge amount. So I think there's a reversion to the mean due, is what I would say. And when sentiment starts to match reality, I think we're going to see, some things rally, whatever that is, business, once all this business consolidation's gone through, maybe property. But there's definitely an opportunity there, I think.
Yeah, I totally
This data
agree.
is just, it doesn't match the reality now. Things are moving in the right direction. Great. Well, talking about moving in the right direction and talking about pessimism, this might make people even more pessimistic as we talk about HMRC, who are definitely coming for you. So, Claire, HMRC are coming, but are your records ready? What are we talking about today and why?
Yeah, so we're going back to basics a little bit. Some people might be tempted to switch off when we talk to you about record keeping, but the reason that we're talking about this today is because Labour have been banging on a lot about the tax gap. And the tax gap is a 40 billion black hole of essentially what is calculated between the tax that HMRC think businesses should be paying and what they're actually paying. So HMRC will have an idea of business sizes, industries, and they say we expect that you should be paying this amount of tax, but actually you declare a different amount on your tax return.
Yeah.
And 40 billion of that tax gap, whopping 60% or 24 billion is, they believe, small businesses. So which
it will be, because I don't know the stats, but when they talk about what percentage of the entire economy small businesses, it's more than the average, isn't it? It's more than 50%.
Well, there's 5.5 million businesses in
massive.
the UK, and obviously
it's the backbone of Britain, as they say.
Big businesses have big corporate accounting firms advising them, so there's far less chance that those numbers are wrong. I think there's a question mark over some of the tax schemes that are used, but certainly when businesses are using some of these let's call them creative tax schemes that allow them to reduce their tax bill, they're doing so at the time they believe that they're playing within the rules. Whereas what HMRC are referring to with this tax gap is where people have made mistakes or deliberately declared less than they should be paying.
Yeah.
So this isn't about using tax schemes to reduce your tax bill or anything like that. This is like actually something is fundamentally wrong.
Yeah, I mean, this is, I guess, you know, let's not get this wrong. There's two sides of this coin, isn't there? There's the didn't know what I was doing and the naive, and then there's the deliberate. I mean, obviously, I knew from back in the days when, you know, started having, how many people I used to know that had like one property. There's no way they were declaring their rental income, you know, 10, 15 years ago. How many aren't doing it now?
Well, what we have seen is the Labour government have dedicated £1.7 billion over the next 4 years, which has allowed them to recruit 500 additional compliance staff at HMRC. And their sole job is to go out and use the data that's available to them. So all of the tax returns that you're submitting, your VAT returns, your corporation tax return, everything that goes into HMRC, these 500 staff have got very good AI data analysis tools over the top of this to try and pinpoint where mistakes might be happening, and therefore they are going and investigating businesses, asking for more information. And a lot has been uncovered. So that's the reason that we're talking to you today about record keeping. It's definitely a feeling in the accounting world at the moment amongst accountants that HMRC may be moving the goalposts, that they've got way stricter when they're doing investigations. And that's the difficulty, is that the UK tax law is not rules-based. It doesn't say you can do this, you can't do that. It gives you a guidance that you have to work within. And that means now that for years, accountants have been telling people you can do this, you can do that. And HMRC are now coming in and for the first time ever challenging it. Yeah,
they're taking a different interpretation of it, and because they can. I mean, make no bones about this. I've not seen any government departments actually, like, I mean, we complain about this for years about, like, you've got all these government departments and, like, why aren't they more joined up, and why aren't they, the data's there, why can't they do things better? And for the first time, I'm genuinely seeing what I would quote unquote say, I'm actually quite impressed with the organisation that I've seen from government about the way they're doing this. And a really good example of this is one of the businesses that I own is a estate and letting agent, and they now have full powers to, well, in fact, we have to report our entire landlord database and all of the income statements of the landlords going back for years. And they have legal right to demand that from us now. So every letting agent in the country is reporting their entire landlord database and the sums of money that they've taken on the behalf of that landlord straight into HMRC. So they can just whiz the letters straight back out to the landlord and declare the tax payments.
Yeah.
It's incredibly joined up, and they're doing this. You said they're doing it with Vinted, eBay, all these different things as well.
Online sellers as well. If you have over £1,000 of sales, they're now sharing that information with HMRC as well. So, a lot of people are not doing anything wrong, and there's nothing to worry about. But there are definitely some people that are, making a living on these websites, and they're not declaring it. And there are a lot of landlords out there that have never paid tax on their lettings income. So what we're going to talk to you today is about what good looks like, why you need to keep good records, what you need to keep, and then we're going to give you some examples of what have come up in the last few months with HMRC and where we think that a lot of businesses could actually have a bit of exposure. And then we'll talk you through what you need to do if you are concerned about anything.
Yep. Great. So you're going to talk about these goalposts that they moved?
No, we just did that.
Oh, you haven't
Keep
mentioned
up,
what
Simon.
they were. What were they?
Well, I just said about...
I thought you were going to give some examples.
No, I said we're going to do that afterwards, Simon. Keep up.
Oh.
So we're going to have a look at what good looks like. You've completely lost the plot here, haven't you? You're not paying attention. What good looks like. So why do we need to keep good records, and what does that look like? Well, firstly, a lot of business owners will be used to their accountant, bookkeeper, whoever it is, coming to them saying, I need a copy of this VAT invoice. I need a copy of this VAT invoice. And for a lot of years, business owners have kind of only really been chased for bills relating to VAT.
Yeah.
Simply, if you don't have a VAT bill, then you can't claim the VAT. It's as simple as that. But there are also other reasons why you need to be keeping good records as well. And that is around corporation tax. So essentially, the same reason that you need to keep a bill to claim VAT, you should also be keeping all of your records to prove that you pay the correct corporation tax.
Yep.
A bank transaction for Amazon or a bank transaction for anything is not proving that that was a business expense and that item was consumed in your business. And that's the difficulty by not having records.
Yep.
So it is very crystal clear in the HMRC legislation that the onus is on the business to keep adequate records that prove that the expenses were business purposes.
When you say records, are you talking about receipts, or are you talking about something more complicated than that?
They talk about primary records and secondary records, and primary records would be copies of invoices, receipts and things like that.
Yeah.
Sometimes there are legitimate reasons why they're not available, like, for example, if you've got a supplier that just doesn't send you one, that type of thing. So then they also talk about secondary records, which would be bank statements or statements from suppliers, things like that as well.
So as somebody that's always had a really good accountant,
Thank you.
I don't understand what the problem is, because you would always give a receipt and invoice for everything, wouldn't you? So are you saying, are there people that don't provide receipts and invoices, business owners?
Yes. So I'm the only accountant that you've ever worked with.
Yeah. So you know what? I don't know. Yeah.
You only know gold standard. But 100%, most of
wouldn't be allowed to process it without an invoice or receipt.
I would say that most of the businesses that come to us where their books are in a complete mess, they have a bookkeeper or accountant that's simply working from the bank statement. They're just looking down the bank statement. That says Uber. That says.
But how can they claim
Amazon?
How can they claim the VAT on it and things like that? They haven't got a receipt.
They just do. They just put these rules into Xero that says when it's Amazon, claim 20% VAT and say that it's a stationary expense
without any receipt.
Without any receipts.
So they're just making it up as they go along.
Pretty much, yeah.
Oh.
You would be wildly surprised how common that is.
Oh God. Okay.
So
what happens then? So HMRC go in and you've just got no receipts or anything like that. Like, how do they deal with that with a small business?
They make you pay all the tax back, and then they have the power to fine you on top of it as well.
Okay. So they'll just say, if you haven't got the receipt, then all those 20% you've claimed of VAT, they'll just add it all up and go, give us it all back plus a fine.
Well, it's not just the VAT, so you'd have to pay the VAT back, but you'd also have to pay the corporation tax back.
Oh yeah, because you can't deduct the entire cost of it, so they'll take the entire cost.
Because
so it could be it could be huge.
Exactly, and you can be fined on top of it as well. You get charged interest and penalties. So really, by not keeping your records, it's just it's the easiest thing to do when everything's digital these days. There's no reason to not do it.
Kind of a
when you've got the right
basic,
system set up. Yeah. So we've talked about the need to claim VAT and claim corporation tax, and then the third tax that a lot of business owners, I don't think accountants really talk to business owners about this enough, but this is benefit in kind taxes or payroll taxes. So you need to prove that, for example, something like an Amazon bill could have dual purpose. We all use Amazon to buy stuff for home and we use Amazon to buy stuff for the business. How do you prove, if you don't have a bill, that what you bought was for the office?
Yeah.
So that's where it then starts to become quite great, because you could say, well, actually, there should be some benefit in kind to the employees, because HMRC could claim that you're paying for stuff for your employees. Or worst case scenario, for the business owner, they'll say, no, you're not putting this through your business. We're declaring that this is personal income for yourself.
This is really difficult, because this is a good example of where HMRC are moving goalposts, because there is absolutely nothing in the tax rule that says that you can't buy or pay for anything personally and put it through the business as long as it's legitimate.
It explicitly says that the invoices over £250 must be addressed to the business name, the business address on it.
But most people,
it says
I don't know anybody that
legislation.
would have a business credit card when they start up. They just put stuff on their personal credit card. And
it doesn't talk about where the payment comes from. It talks about how the invoice is addressed. And this is the grey area that there's always been. Generally, HMRC, historically, when they've done an inspection, they'll be quite pragmatic.
But most businesses don't have an office or a registered address these days. So how would that work?
Every business needs a registered address.
Yeah, but usually it's their accountant. So they're not going to have things posted to their accountant,
It doesn't say it needs to be addressed to the registered office. It says it needs to be addressed to the business. Now, if it's addressed to Simon Hancott at your home address.
Okay, so you just have to set up on Amazon like a separate address that just has the business name and then your home address, and you're covered.
Yes. Now, is there a difference? In reality, if it says Simon Hancott at profitcashgrowth.com and then our home address versus Simon Hancott and then our home address, there's not a significant difference that automatically dictates whether that's a business expense or not. And that's where the grey area now comes in, because historically HMRC have been fairly pragmatic when they've done inspections. And as long as, it's not cosmetics that you're buying and things like that, and there's not a large volume going through your business, they've generally been quite pragmatic and allowed those bills through. And they would take a practical approach to real life and how life actually works in a business. But what's happening now is they are well within their rights to say, this is what the legislation says, and we're not allowing you any of these expenses through your business. You need to be putting these through your personal income and paying personal tax on them instead. Yeah, so not only can you not claim the VAT, you can't pay the corporation tax, you've now got to pay personal income tax on them. Like, you're literally getting hit from all angles.
Yeah. I mean, it just sounds, if it's dodgy stuff, maybe, but I just feel like if they were like, oh, what's this? I'd be like, well, here's the laptop, here's the serial number on the bottom of it. It's my work laptop. Like,
yeah, something like a laptop, Simon. That's what I mean. HMRC will be pragmatic. But when you're buying pens for your office, how do you know those pens went to the office and not your home address? Well, the onus is on you to prove that it's a business expense. How do you prove that that was a business expense?
But just having your business name on the top of it doesn't, because I could just change that tomorrow and it wouldn't make any difference and just haven't lived and then use them at home.
But it's way
it's not a pragmatic view, is it, at all?
It's way more difficult for HMRC to challenge it if it's addressed to your business and it's delivered to your business and et cetera, et cetera.
So it's just good practice. It's an easy win. So the easy win here is just make sure you've got your business name on your Amazon account on top of your home address. If you haven't, it's your home address. Simple. You don't need to necessarily set up a separate Amazon account. That's not required.
Yeah.
You just want to have your business name somewhere on the delivery note.
We're not doing a whole podcast about Amazon invoices here, are we? Like, this is just like expenses in general, any cost going through your business, any income.
How do you deal with that? So you go to Tesco and they can't
documented.
print your business name on the receipt. So how do you write it afterwards? Write your business name.
There's specific legislation. There's a difference between if the cost is less than £250, then you're allowed what's called a simplified receipt. That's typically like a Tesco's till receipt, something like that. It doesn't need to be addressed to you.
Yeah.
Versus if it's over £250, legislation is black and white, must be addressed to your business.
Okay, so that's the key rule, isn't it?
Yeah.
That it's all about expenditure.
Yeah.
So actually, the vast majority of the kind of little tit for tats they're not moving the goalposts on those things.
No, not receipts under £250. Yeah. They're being pragmatic about that still. But so I'm going to talk through some actual examples of areas that have been talked to a lot in the accounting world recently, where accountants feel that maybe the goalposts have been moved or HMRC have been particularly stringent on these areas. Number one is Amazon bills.
Yeah, we talked about.
There has been quite a few specific cases where Amazon have gone in and done inspections, where HMRC have done inspections, and they've in particular picked up on quantities of Amazon bills that are addressed to the director of the business personally and not to the business, and they've said they're not allowed for VAT and they're not allowed for corporation tax. Yeah. So that business owner is just like completely, absolutely stung, and it's because his accountant has never said to him, this needs to be addressed to the business, this isn't adequate for record keeping.
And his accountant never would, because that was never a rule before that's been put forward, so it's always been accepted by HMRC. So
it's never been challenged by HMRC.
Yeah, exactly. Never been challenged before, so there's no preconceived prescription that anyone could take as a advice.
I mean, I never thought I'd say these words coming out of my mouth, but to be fair to HMRC, the rules around record keeping are very clear. There is no room for discrepancy here. So I think this is accountants and bookkeepers being a little bit lax and saying, well, HMRC have never really challenged this, so we won't tell the business owner either. And actually, they've been doing the business owners a bit of a disservice. Like, we're constantly going on at people about record keeping. Like, especially now, HMRC have got this big tax gap to close, and they're just going after everything. So your record keeping is more important than ever, because you just don't want the hassle of an inspection. It's just not worth it.
No.
So Amazon is a really good example. It applies to all the portals, eBay, anything like that. Work from home allowance. This is something that the rules have actually recently changed from April this year. They're tightening up on this, that you need to prove that there's a requirement for you to work from home. As a business owner, it's not just adequate enough for you to say, well, I work from home at the weekends and I answer calls and things like that. You need to actually have a contract that says there is a requirement for you to work from home. Home is your place of work.
Okay.
So where we've got offices, it's going to be quite difficult for us to say there's a genuine requirement for us to work from home.
Yeah, because you've got a place of work, a designated place of work, yeah.
But
it's the same as they used to apply to mileage. Like, you couldn't claim your mileage into the office because you have an office and that's your designated place of work and that kind of thing,
So work from home allowance, previously accountants would just, as blanket, put the £6.50 a week through for each director. And really, it's, the tiny amount of money that we're talking about here is not worth the risk. Just don't put it on your tax return, because HMRC are all over that.
What about software and subscriptions? Because I find this a little bit of an overlap, because we have like all the kind of, YouTube premiums and all the rest of that. And we put it all through the business because, we're heavy use. We put everything on YouTube. But we'd be lying if we didn't say we weren't getting a bit of Yeah, okay. Don't say that.
Don't say that in public.
Right, okay.
No, look.
Well, it's 90% weighted, isn't it? Business weighted.
Yeah, and, HMRC will say incidental use. So that's
it. It's incidental. Yeah,
now, we are comfortable saying that our YouTube subscriptions go through because we have a YouTube channel.
Yeah.
So therefore, we need to see what our competitors are doing.
Absolutely,
we need to be heavy users of YouTube. We need to watch our own content on YouTube. So that there is a genuine...
to watch other people's content on YouTube.
Exactly.
See?
So there is a genuine reason why we have a YouTube subscription. It's to avoid the adverts when we're doing research and planning our marketing. Yeah. But if you don't have a YouTube channel, what's your reason for having a YouTube subscription?
Where does Amazon Prime fit on this?
Again, Amazon Prime, very grey area, because most people have got a personal Amazon Prime subscription. So again, it's the type of thing that, I do not...
For me, it's like business urgency means you need stuff delivered tomorrow. So Amazon Prime is the most efficient business way of doing that, isn't it?
If you were to play it by the letter of law, what you should do is take your Amazon Prime subscription and divide it by the number of deliveries that you have and apportion it between personal and business. Who's actually going to do that for,
Sounds like a nightmare.
£8 a month? So these are the areas that HMRC could pick up on, but something like an Amazon Prime subscription is probably too small fry for them, I would suggest.
Do you think, just thinking more like broadly around behaviours and things like this, we always say in like the business world, like this is the government equivalent of what we tell business owners never to do, which is to basically just focus on all the small things in your business, constantly focus on cutting the costs and just totally neglecting growing your business, when it's far, far easier to if you put the vision and focus in place to grow your business, than it is to save £8 a week by putting 100 bureaucratic processes in place to make that work. Is this the government equivalent of that? Is this just more like not only a Labour anti-growth, but they're actually stifling everything by going like small fry with all this and focusing totally in the wrong area? Like you say, they've put 500 people, 1.7 billion of cost into penny pinching, rather than focus on how we can grow our way out of the problem?
Well, I think there's two things. There's the age-old story around, the windows in New York and how when the windows are smashed...
Yeah, broken window methodology.
Yeah. So I think there is that here. And this is, we're doing a whole podcast on this and doing a little bit of scaremongering for people and saying, don't put this stuff through your business. It's not worth it. But what that is doing, to kind of pick up on your point of, is that then stifling growth and et cetera, what that is doing is a lot of business owners think, it's hard work running a business, blah, 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 but I get all these perks and... So actually, it's not all that bad. But if all of these small little perks are withdrawn as well, and you can't get away with putting anything through your business anymore,
it just takes away plus the fact that
you might as well go get a job.
By the time they've, let's be honest, it is a risk-reward based decision. By the time the business owner's distracted himself with all of the time of making sure his records are kept like this and he's dotted every I and crossed every T, he's spent no time growing his business and his business is useless anyway. So Labour have done a really good job of just destroying small business growth anyway, because they've just distracted the business owners in totally the wrong place to grow the economy again, haven't they?
Yeah,
and that's the problem.
The really frustrating thing is like in my business, for example, pretty much everything that goes through my business, I have to log on to a blooming portal and download an invoice or something, and it's just stuff like that
it's just time-consuming.
Even I'm a little bit like the ChatGPT invoice where there's no VAT on it. Do I really need to download that every month? And unfortunately, the answer is now yes, and that's the frustrating thing, is that it's just adding time into everything.
It's yes on a... Ultimately, the business owner has a risk-reward decision to make, don't they?
Yes.
Based on the fact of what the ultimate penalty could be around the fines and everything else versus the cost of their business of the distraction of actually doing it right in the first place. And there is a commercial decision to be made there.
And this is kind of what leads me on to the next point as to what good looks like. If you've got an accountant that is just being very black and white with you, saying you must do this, you can't do that, that's not allowed, this is allowed, they're literally making these rules up. And accountants really do need to switch from this being the gatekeepers and being the police for HMRC and switching more to advising business owners on where the risk is. Because actually, HMRC doesn't say that you have to upload a bill to zero. HMRC says that you need to keep these records. Well, if you can log on to ChatGPT
go and get it.
And go and get it if you have an inspection, that's absolutely fine. That's adequate. So the chance of being selected for an inspection, the chance of HMRC asking for that bill, and then the chance of you not being able to log on to the portal and get it, you've got to add all those things together and say, where is the balance of risk and reward? I would say black and white with VAT. Don't take any risk with VAT because it's just not worth it. That is so simple. If you cannot produce the invoice on the day that you're inspected, it's not allowed. So that should be the one area that you don't do that with. But, corporation tax, whether something was a personal business expense, those are the areas that I would say, let's just be a bit sensible about what we are and aren't allowing through.
Great. Finally, and keep this short because we're running over a bit here, what should somebody do if they realise that they've dropped a massive ball here?
Go and speak to a specialist accountant. Do not speak to a generalist high street accountant. Don't speak to the guy that's just doing your year-end accounts. Go and speak to somebody that is dealing with these sorts of cases with HMRC. The way that you make a disclosure to HMRC and what you tell them at what point
matters,
can make a humongous impact on, firstly, how much HMRC want to look at, and secondly, how much they could fine you or deal with the situation.
So it's like, you become aware of something, don't bury your head in the sands, go and have a conversation with a specialist, come up with a plan and set that plan in motion and get yourself on the right side of this. That's the best course of action, isn't it, always?
In particular,
it's only going to get worse. This isn't going to get better.
In particular, there's been a big campaign around landlords at the moment. HMRC have been looking at letting agent data and also land registry data, and they have written to hundreds of thousands of people that they believe are landlords and have not declared rental income on their tax returns. And some people, there are some horrific stories, old people in like their 70s, 80s that have inherited a property when one of their parents died and they've never declared income tax on it. So there's a lot of stuff going on at the moment. But there was a very specific window of time where you could go to HMRC. If you got a letter, you could say, realise we've made a mistake, here's all the tax we owe you, and HMRC would leave you alone. But if you're not within that time window, then HMRC are really going to come down heavy on this. So if you fall into that category of landlords, get in touch with a specialist right now.
Yeah, I think the noise on the street is landlords is I hear it and see it all the time. Like, these letters are just dropping in landlords' doors, like, out of the blue, and they've got the records, they've got the income, they know exactly what's gone on. You're almost better off getting ahead of this and putting your hand up and going, I didn't realise, so here's what I want to do the declaration of, and various other things.
Yeah.
Great. Brilliant. Right. Well, we've got a really good Profit Cash Growth Extra this week, haven't we, Claire?
We have. And it is another AI ChatGPT special, but we have our personal sommelier for our wine choices now, don't we?
We do indeed.
We have got into the habit of, whenever we go out, we now just snap a picture of the wine menu. We let ChatGPT know what sort of restaurant we're in. So is it like Italian, Japanese, or even what we've chosen on the menu? And it suggests a wine. So I just told ChatGPT, I actually snapped a couple of pictures of bottles of wine that we particularly like drinking. I said, this is our sort of choices.
Personal taste,
These are our personal tastes. Update your memory, and every time I ask you for a wine recommendation,
remember this.
And it's spot on.
It's getting, the more you do it, and then the more you feed it back to that chat, and just be like, you tell it that one you've just said, we really like that. I guess it's starting to improve and get better and better and better. So it's been really good at not like accidentally having those bottles where you're like, we made a mistake here.
And we're drinking a lot of wine that we wouldn't normally drink.
Yeah.
Great varieties that we wouldn't typically go for, and unusual things on the menu, and also saving a bit of money sometimes, because it suggests a real cheapo bottle on the menu, and it's actually quite good.
Because they would expect it to obviously just always be gravitating towards really expensive bottles of wine, but it's a real mix. Like sometimes they'll go like, this is the one, and it's a bit more expensive. And then like last night it was like 27 quid, and it was like really nice. And it's like...
I mean, we like our wine, but we're not particularly like up on like pairing wine with food and things like that. And I think that's where this really comes in. Like, when you tell it, if you just gave it the wine menu, it would say, based on what you like, this is what we think. But then if you tell it the type of food that you're eating, you're having pasta or meat or whatever, it gets really, really good. And that's, I think, why our wine choices have got so good now.
Yeah, absolutely.
So give that a go.
Check it out. Use ChatGPT as your personal wine sommelier. Great. Well, thanks for joining us for another week's podcast. As always, if you feel like you might have outgrown your current accountant and you'd like to work with Claire and her great team here at Profit Cash Growth, just nip over to the website, profitcashgrowth.com. On there, you can book a call from one of the slots available to have an initial chat with Claire, just to assess where your business is at and if they can help you move forward, especially if you're a £1 to £10 million growing business. This is exactly what the guys do day in, day out, and create a fully outsourced finance function for you. And please, as always, rate, review and subscribe to the episode. Just share this episode with any friends, business owners who might, especially if you think they're not declaring their tax, maybe share this one with them. And as always, we will see you again next week.